guys, in the premium video I've just done, I've been talking a lot about these monthly charts and what I'm seeing in these monthly charts. Back to the Dow, obviously, it's a key indicator of what we could be seeing here. I mean, that is, for a start, that's a pretty shallow open and close in last month's action. Slamming up against 2013 highs and not breaking through. With non-farm payroll tomorrow. Look at this divergent RSI. It's very high, very extended, and these markets are absolutely struggling up here. If you look at this daily pattern, this is a great funnel-like pattern. I took some points out of this today. I'll show you the video. Unfortunately, in the room, I have to be absolutely honest, the room has struggled this week because of the volatility and the low volume and the extreme moves we've had. When we did get a push, nice 50-60 points that moved the upside, I didn't get filled because there's no pullback. So it's symptomatic of a market to me that's really struggling. This pushed itself up, but exhausted at the top, dragged itself back. But this is very small moves up here. If we can't close above that tomorrow, this is definitely going to tumble down. So I'm looking to see how we react to the data, looking to see how we open, and certainly looking into next week to see whether we can hold up here, or if we're really going to get into this realms, break that little wedge we've got going here and start to tumble down. Sell in May and go away. Is that going to pan out this year? Certainly we're heading for sort of summer doldrums, and we've got Easter behind us. Getting very close and close to summer doldrums. This could be a time to look for shorts in this. Okay. I hope that helps, and if you are interested in the premium video, which is full of meaty information analysis on stocks, commodities and forex, then let me know. Alright, enjoy your evening and see you at the next video. Hi traders, unfortunately trading this Dow, sometimes it's a question of timing, and timing can mean bending to the US timescales and not UK. This is the trouble with being a European when you're trading the US market. The US like to, obviously like everybody else, they like to buy value and they like to sell expensive. They like to buy low, sell high. And so what I waited patiently for this market, I took a move up here. They stopped me out. It went down to, I thought 50 would hold, went down to the weekly pivot. It didn't get, I waited for a pullback of 40, didn't get filled. It just didn't pull back. So I ended up getting in quite high up here. We've currently got 20 points and looking to see if that can push up. Currently got 25 points. Okay, so I mean the room does work. Sometimes you just have to be a little more patient and sit back and let the market come to you. Okay, so I hope that helps, and do join us in the room. Thanks. Hi traders, just after I stopped that little bit of filming, I actually flipped this. Well, not quite flipped it, but I took it off for this major resistance for 25. And then when I came back to my, took a break, when I came back to my screen I saw this sort of rolling over. I got short here, and I'm going to hold this. I'm going to see if I can hold this into the close, because if you look at what I've got here, I'm plus 28 at the moment, so plus 25 to the upside. If you now look at this 4-hour chart, what I'm seeing here is I'm seeing a 4-hour chart that's got divergent RSI hitting testing a reversal bar, coming under the underside of a trend line, and a hangman in the candle. So I'm plus 33 at the moment. I'm just going to sit on this. Now what I'm going to do is I'm going to sit here with a hold this overnight if we close low, and I'm going to probably lock in, if I get a reasonable sort of 50, 60 plus points, I'll lock in at least, you know, some of the profit. I don't want to give it too much, even though it's, you know, it's a pittance. What I don't want to do is you know, for this to slam up and get some nasty slippage or something like that. So I will do that. Now what, tomorrow, if this market is short tomorrow, what I'll do, I'll leave this on and then I will short the waves. So I'll build my account up by every time. So for example, if we drop further and we bounce, I will short somewhere like there. If we drop further and bounce, I will short there, etc. You get the picture. So what I'm going to do is, and every time I do that, I will move this stop down, then I'll move the stop for that. So that's trade 1, this is trade 2, so I'll move the stop down for that one if we get down here. Trade 3, I'll move the stop down here, and all the time, if this happens, I'll lock in profits on each one of those trades until, you know, if we do start to drop, then I'll be fully loaded with about anything from 4, 5, 6 entries. And I do actually tend to increase my position size when I do that as well, if I get a wave down like that. So by the time I come down here, I could be anything up to 15, 20, 25 pounds a point, depending on how that's done. So although I'm trading up here with beer money, not even beer money, you know, these days you can't buy 4 or 5 people around of drinks with that kind of money I've got on the account at the moment, not in the bank but in the account. But I can really capitalise on my skills as a day trader by looking at how getting into a position for something that might potentially drop this much. I mean, if all this does is come down to support and then zip up, then it doesn't matter, because I'll just manage my stop on the way down. So I'd have captured a decent percentage of that move if this scenario works out. If it doesn't work out, you know, I'm not. It's no big deal, because I've literally not risking much capital at the moment. If you are a swing trader, obviously that's no use to you. What you can do as a swing trader, if it's a very long-term trade, you could do this on a long term. Let's look at how you could have done that on the last down move in this market. Now we engulfed that bar today, so all we've got to do is close under 30, we're 15 points lower than where we are now, and that's a sell signal. And look at this funnel-like pattern we've got in this daily chart. But I mean, if into the close, if we start closing higher, we end up again stopping out, for example, then I'll stand aside and see where we are tomorrow. Right, back to what I was talking about. If I'd done the same thing up here, got short up here, and then every time over the period of days, if I'd have just, you know, shorted these levels, ramped my stop down every time, you know, this zoomed down, I could have had a really nice loaded position by the time we got down to this level of support. So it's a way of building a position with relatively low risk entry, risking my risk gets lesser and lesser to me the more I trade in a style like that. Alternatively, you needn't do anything as complicated as that. That's too complicated for you, particularly if you're a swing trader. If this is a sell signal, put an order for a pullback up here, stop above the highs, and then see if you can wing it down. Now, this is not to say that this is about to crash. This is not to say that we haven't got the sell signal yet, because this is still intraday and we don't know where this is going to close today. But I'm just illustrating how you can, you know, watch out for major brick walls. I mean, this is just a major brick wall. These are lots of bricks in the wall, and this will be the fourth brick in the wall. If they can't get through it, then path of least resistance is down. Okay, so I'll go through that in more detail in the room and as time goes by, but so I'm plus nearly 60 points at the moment on this Dow today, so no, I'm not, sorry, I got a stop out, didn't I? I got a 12-point stop out, so I'm plus about 45, 50 odd points, so not much, but with the potential to get a reasonable trade out of that. Alright, I do hope that helps, and I will look forward to talking to you again either in the room or in the next video. Thanks.